Hello and welcome to the 12th episode of Season 10 of the Dark Money Files, in which we shine a light into a murky world. I am Ray Blake, and with me is my co-host, friend and business partner Graham Barrow. Hello, Graham.
Hello, Ray.
Graham, we're in the fortunate position of not having to deal with FATCA and CRS ourselves, so I'll never have to manually collect and validate tax information. But many of our listeners, especially those in the fund administration space, know exactly what I'm talking about and are probably shuddering a bit at the thought.
But they are, Ray. But for those, Deeppool have created a product called Cure, K-U-R-E, which automates the entire process, doing all of that for you across multiple entities and multiple jurisdictions. Hurrah! And it has full AEOI, which for those of you who don't know, is Automated Exchange of Information Reporting.
And not EIEIO then?
No.
That's something else. Okay, fine.
It is. And if you're called McDonald, you probably have a farm.
Fair enough.
But what it does mean, Ray, is no more manual errors, no more wasted time, no more cracks for unscrupulous investors to fall through, no more cold shivers. So go and check it out at deep-pool.com.
All right, lovely. Okay, so look, Graham, following our last episode on the Companies House provisions in the new Economic Crime and Corporate Transparency Act, we promised to follow up on the Act's other provisions, didn't we?
Well, we did, and I believe there are 5 that we have to get through, aren't there?
There are indeed, so perhaps we'd better dive straight in.
Well, make a splash. Yes, but it's worth reflecting first, perhaps, that 2 years ago, it looked like the British government's economic crime agenda was slipping down the back of the sofa, didn't it?
Yeah, the urgency we were all urging was falling on deaf ears at that time. It took the unexpected Russian action in Ukraine to get it back on the table.
Yes, and after all of that wait, we've now had 2 economic crime acts in under 2 years.
Well, you know how it is, Graham. You wait forever for an economic crime act and then 2 come at once.
Just like buses. So, what provision of the new act, Ray, shall we look at first?
Well, I think there's been a lot of interest in the new corporate criminal offence of failure to prevent fraud.
There really has, especially since something in excess of 40% of all crime in the UK right now is fraud.
Now, that number bears repeating, Graham.
Well, yeah, so to put it in numerical terms, more than 4 in every 10 crimes are fraud.
Now, the other 6 in every 10 encompass everything from speeding and shoplifting to murder, I suppose. So surely that makes fraud the predominant crime of our age.
Well, it absolutely does, which means, I suppose, more people suffer from fraud than from any other crime. So, this provision, introduced quite controversially in the committee stage of the Act when it was still a bill, was welcomed, wasn't it?
Yeah, it was. And I think people envisaged a provision like the failure to prevent tax evasion introduced in the Criminal Finances Act of 2017, where firms acquired a general and quite broad duty to guard against facilitating or enabling their clients evading tax of all kinds, whether that was UK or foreign tax.
So is that what the new Act creates then?
No, it isn't. In fact, a close reading of the provision is a bit disappointing, frankly.
Oh, how so?
Well, the offence only covers larger businesses, for one thing.
Oh, and for another?
It only covers instances of fraud committed by the firm's own employees or agents that the firm itself profits from, intentionally or otherwise.
Okay, so if a bank fails to prevent a member of its own staff defrauding a customer, which leads to a profit for the bank, that's caught.
Yes, it is.
But, if I've got this right, if the bank fails to prevent someone else defrauding a customer and the bank itself doesn't benefit, that's not going to be covered.
No, it wouldn't be covered. I mean, we're waiting for expanded guidance on this, but it looks as though we might be able to interpret an agent as including those involved in supply chains, but I can't see how it would apply more widely to independent criminal fraudsters preying on a bank's customers.
And of course, the bank doesn't make a profit from that sort of fraud.
Well, quite the opposite, in fact, Graham, through having most of the time to reimburse the customer.
Well, if I'm being honest, Ray, personally, I feel a bit underwhelmed by that particular measure.
You're not alone, Graham.
But I'm not. All right, well, moving on then, what else do we have?
The Act has some new measures for crypto asset seizure and recovery. Interestingly, there are measures in the criminal regime and in the civil regime.
Now, that is interesting because it means that crypto can be seized and applied in civil recoveries more easily.
Yeah, and crucially, courts will be able to turn detained or frozen crypto into fiat cash and release to victims at an early stage in proceedings.
Well, now that is a useful power. Once you get beyond the big crypto coins, some of these tokens can be very, very volatile in value. I've got one, I know all about that. Only a very few, though. And you risk them becoming worthless before you can use them otherwise.
Now, I imagine that's the thinking behind some of these new powers, but there's more.
Yes, there's the power to recover and control unhosted crypto discovered when executing a search warrant. So I presume that means in some sort of cold storage or disconnected drive, is that right?
Yeah, it is. Basically, your holding of crypto that isn't done by somebody like an exchange on your behalf. You hold your own keys, and therefore, as the crypto bros say, it's your own cheese.
Yeah, well, there you go. Those crypto bros, they're so witty, aren't they?
Aren't they lovely?
Yeah, and so I understand under both the civil and criminal regimes, there's the ability to allow destruction of crypto assets.
Yeah, there is. Why might you want to do that?
Well, if your recovered crypto is, say, a privacy coin like Monero, there might be a view that leaving it in circulation can only further criminal activity.
And I wouldn't disagree. So, as an alternative, destruction would be a useful law enforcement tool, rather like destruction of housebreaking equipment, for instance.
Yeah, or burning of marijuana, I suppose. Yeah, it's just slightly heartbreaking. But
well, how else do you use marijuana, Graham?
Well, this is true. I was thinking more in an incinerator than a roll-up.
Right. Oh, I see, yeah. Okay.
Yeah, I think we need to move on. So, Ray, I'm sure there are crypto enthusiasts who would disagree with all of this, but I cannot imagine a legitimate use for Monero.
Well, now the courts will be able, just like with marijuana, to burn it with fire, Graham.
And I see officers will also be able to move crypto into a law enforcement controlled wallet so that effectively it can be seized, detained and sold like any other property associated with criminal activity.
Indeed.
All right, so that's crypto in brief. What else is in the Act, Ray?
There's some interesting provision for money laundering related information sharing between firms.
Between firms, you say?
Yeah, right now that's pretty difficult and risky given data laws.
It really is. Firms can generally see only their own data. If there's a money laundering operation being conducted across multiple firms, nobody will be able to see the whole scheme, each bank only having sight of its own little bit.
Yeah, and right now, if your firm exits a relationship on financial crime grounds, the customer can just go to the firm next door and seek facilities there. You can't tell that firm about your concerns.
And that is so frustrating.
So, these new powers will allow two distinct flavours of data sharing. First, a firm will be able to disclose directly to another regulated firm customer information for the purposes of preventing, investigating and detecting economic crime. Now, in that event, civil liability for breaches of confidentiality will not apply, so long as this information is shared purely for this purpose, not for commercial reasons.
Okay, but is that mandated? I mean, does a firm have to share?
No, it's purely voluntary, and whether you share or not, it doesn't take away any duty to report suspicions to law enforcement.
Okay, and that's a good point.
Mm.
But what about an example where you exit a customer? You don't know where they might apply for other facilities, and you can't just broadcast to everyone, presumably.
No, and you'll remember I said there are two flavours of data sharing. This is where the second one comes in.
Ah, so what's that?
That would be indirect sharing through a third-party intermediary.
Okay, how would that work?
Well, that's yet to be fully established, but my assumption is that it would be a bit like a credit reference agency that received data directly from firms, and then if another firm inquired about a name where they held data, that could be released to them.
Yeah, that makes sense. And I imagine that just as with credit reference agencies, there would need to be some protections on misuse of data, and someone who thinks they are unfairly blackballed should be able to object.
Yeah, the Act envisages protections without defining specific measures in this respect at the moment.
Okay, watch this space then.
Next, we have some interesting provisions that relate to the identification doctrine.
Ah, yes, this is the legal test, isn't it, for deciding whether the actions and mind of a natural person can be regarded as those of a legal person.
Yeah, or to put it another way, when are the actions of a senior manager in a company actions of that company?
Now, at the moment, the answer to this is when that person is, quotes, directing mind and will of the corporate entity. When that's the case, and the directing will and mind has broken the law, such a corporate entity has committed an offence too. And that stems from common law, and the legal test for this was established, would you believe, in 1971.
But it still works, right?
Well, not so well, Ray. Since 1971, corporate complexity has grown enormously, and in a modern large corporate entity, this test is often impossible to apply. Decision making might be distributed widely, and often subsidiaries and their leaders might have some degree of autonomy. So the test from 1971 is no longer fit for purpose.
No. In its supporting notes to the provision, the government says, and I'm quoting, by effect, senior people in a corporation who have decision making over substantial areas of business are not considered sufficiently controlling enough to hold the corporate liable, despite having the authority in the corporate to commit large-scale harms. This does not incentivise good governance and clear lines of accountability.
Hard to disagree. But it's interesting, Ray, isn't it, that in the parts of the regulated sector where the SMCR, the Senior Management and Certification Regime, applies, the same problem is being addressed in the opposite direction.
Yeah, in SMCR, the focus is pinning corporate actions on the controlling individual who's accountable.
It's like a tunnel where the digging starts at both ends.
And hopefully it will meet in the middle as intended.
Well, yes. What's the nature of the new test then, Ray?
Well, in matters relating to economic crime, there are going to be new rules to define senior management as driving the actions of the company, and thus committing a corporate offence. And the government notes that this brings corporate economic crime into alignment with the rules for determining corporate manslaughter and corporate homicide.
Oh, now that's not a comfortable thought. But it seems right given the human harms involved. So now, by my count, Ray, we've covered 4 of the 5 extra areas. Have we saved the best for last?
I think so, Graham. This one is a long-awaited reform close to both our hearts.
So that will be the anti-slap rules then.
It will indeed. Do you want to explain what slaps are, first of all, and then maybe we can share an example of why they're very definitely a bad thing?
Of course, and I'm happy to do so. So a slap, 2 Ps, is a strategic lawsuit against public participation. It's effectively an action brought in court that might allege libel or defamation whose intent isn't to prove that such an offence has occurred. Rather, it is launched prior to any reporting or publication of information that may well be true, or it might be false. But either way, the subject is determined should not be published at all, and the court action is therefore designed to prevent it.
And how does it do that? I mean, if you're publishing information that's true, you can't be successfully sued, can you?
Well, in that event, you'd probably win any case, but only probably. And getting to that point, defending yourself in court will cost you an awful lot of money, which you might not have and which you might not be able to recover even if you win.
And so the point is not to take you to court, but to intimidate you with the threat of a long and expensive court case to make you back down and just not publish.
Yes, that is exactly what it is. The lawsuit is strategic because it's designed to prevent public participation, to keep uncomfortable news away from public eyes.
And does this happen often, Graham?
Well, how would we know, Ray?
Well, I mean, that's a good point. We wouldn't, would we, by design?
Well, no, but we can share an illustrative story that comes from our friend Oliver Bullough, author of Moneyland, and most recently, Butler to the World.
Available from all good booksellers.
Yes, and most of the bad ones too.
Well, yeah. Although in person he shared quite a lot of detail with us, it seems right that we limit ourselves here to what he shared in his published account.
I think that's probably best, Ray. We wouldn't want to land him in any trouble either, would we?
So, do you want to tell the story of Nonna, Graham?
Well, yes. Nonna is a young haemophiliac who grew up in Ukraine. Haemophiliacs, of course, are vulnerable to cuts and knocks because their blood does not clot properly. So if their skin breaks, they can quite easily bleed to death.
Now, if you're diagnosed with haemophilia today, it won't kill you as long as you have access to drugs that will give your blood the ability to clot properly. These are widely available. They should have been available to Nonna for free through the Ukrainian Health Service.
Yes, they should have, but because of rampant corruption in that service, and we're going back a few years, to be clear, Nina, who was Nonna's mother, had to rely on black market drugs to keep her daughter safe.
Well, safe-ish, Graham. Black market drugs and safe often don't correlate.
Well, that is a very good point, Ray, and really quite true. Anyway, Oliver and his colleagues made a film that included Nonna's story and also featured a Ukrainian businessman, an ex-government minister called Mykola Zlochevsky. There was no accusation in the film that he personally had any involvement in the corruption, however.
The film was due to premiere in London in May 2016 at a private club on the eve of an anti-corruption summit hosted by the UK government.
But it was never shown. Just before the day of screening, a London law firm warned the club and its manager personally that should they go ahead with the screening, then Zlochevsky would have no choice but to pursue it for damages, which the firm suggested would be substantial, although they admitted they had not actually seen the film, whilst characterising it as damaging and defamatory to their client.
Now, Zlochevsky had no reputation in the UK to defend, so his claim would not have stood. But it would still have cost a lot of money to fight. The club would have won, but not before exhausting their funds.
And that letter scared off anyone else who might have shown the film. It has, in fact, never been shown.
Which is why you probably don't know about a 7-year-old Ukrainian girl who was constitutionally entitled to free life-saving drugs, but whose mother was forced by criminally corrupt officials to instead turn to the black market to try and keep her daughter alive.
Yeah. And Oliver has more examples. You can read about them in Moneyland. It's worth noting too that the UK government states that 70% of slaps are connected to financial crime and corruption.
So, slaps are a bad thing, and it's clearly right that anti-slap rules should be part of the economic crime agenda specifically. What is this new act going to do about it, Graham?
Well, once again, Ray, detail is sparse right now, but we do know the general principles.
I believe defendants will be able to use a new early dismissal mechanism.
Yeah, so that in the example of Oliver's film, it ought to be quite easy and quick to show there is no case to defend and have the action thrown out.
And secondly, where a slap case is allowed to proceed, a new costs protection regime will apply.
Yeah, so that a defendant need not be intimidated by the threat of financial ruin and have to just cave in.
No, and in turn that ought to mean that the rich and powerful who engage in financial crime and corruption can no longer rely on the British courts to protect them from publicity.
Ah, yes, and if I can here quote that noted thinker, Lizzo, Ray, it's about damn time.
Well, it certainly is. So, lots more detail should emerge on these new provisions, and we'll keep an eye out to see how that pans out. In the meantime, though, I wonder if we can squeeze in another episode between Christmas and the New Year break.
Well, let's see. See what happens. See what emerges. But if we don't manage it, have a nice break, everybody.
I'm looking forward to it.